Assalamu alaikum. Welcome to video 9. This is IAS 16 property, plant and equipment. So, first let us go through the cost and the depreciation of an asset. IAS 16 states property, plant, equipment initially they are measured at cost, and the cost includes their purchase price less any trade discount or rebate plus any further cost directly attributable to bring the asset in its working condition or location. Subsequent expenditure on non-current assets, they are capitalized if it enhances the economic benefit of the asset, for example, adding a new wing to a building, replaces part of an asset that has been separately depreciated and has been fully depreciated, for example, furnace that requires new lining periodically, or replace economic benefit previously consumed, major inspection of aircraft. All this expenditure you can capitalize. Now, the aim of this depreciation is to spread the cost of the asset over its life in the business. So IS 16 requires depreciation method, useful life has to be reviewed at the end of each year and has to be revised if it's necessary. This is not a change in accounting policy. Change in accounting method and useful life of the asset are changes in accounting estimate which will be dealt according to IS 8 prospectively. And if an asset has a part with different lives, for example, a building with a flat roof, then the component part has to be capitalized and separately depreciated. Now, example 1. A hotel company is undertaking building work to extend its hotel from 20 rooms to 25 rooms. So this is increasing their earning capacity of the hotel. Okay, which means it is representing an enhancement of the economic benefit. Therefore, this cost of extension you have to capitalize. Very important in IS 16 what to capitalize and what not to capitalize. Okay, now example 2. Hotel company is undertaking a refurbishment of its hotel involving repainting of all the guest room. Remember, repainting will not enhance the economic benefit. So the cost of repainting should not be capitalized. There, they should be taken as expense in P&L. Now, revaluation. Revaluation of your PPE is optional, but if one asset is revalued, all assets in that class has to be revalued. Valuation has to be kept up to date so that your carrying amount does not differ materially from the fair value at each statement of financial position date. Now, very important for revaluation gain and revaluation loss, how do you deal with it? If it's a revaluation gain, they are credited to other comprehensive income unless there was unless the gain reverses a previous revaluation loss that was recognized in statement of profit and loss. Okay, next, if it's a revaluation loss, you will debit in your profit and loss unless the loss relates to revaluation surplus, previous revaluation surplus, which you will debit from the OCI first and the extra will go to profit and loss. Okay, now depreciation on revalued asset. So depreciation which is charged on your revalued asset, that is revalued amount minus the residual value over the remaining useful life of the asset. That's how you get the depreciation on a revalued asset. And because your asset has been revalued, now depreciation will be more. Okay, so that excess depreciation you can transfer from revaluation surplus to retained earnings. There's a choice that entity can do that. If it is done, it has to be done consistently each year. Now, example 3. A hotel chain is undertaking a revaluation of its property for the first time, resulting in a revaluation gain of 250,000. So this 250,000 will go in OCR. In 2005, they have got a revaluation loss of 50,000. So what should you do? See, earlier there was a gain, now it's a loss. So first, the loss has to be taken to other comprehensive income because there was a gain that has been recorded in OCI previously. Then the balance will be reduced, will go to profit and loss. So first 50,000 loss that have occurred. Okay, so you have to separate the 50,000 and 200,000. Okay, now loss of 50,000 will be taken to other comprehensive. The balance 200 will be taken from, will be reduced. So the balance on your revaluation surplus, see, from 250 you will reduce only 50. So that 50,000 you will only take from OCI. Still you will be having 200,000. Okay, then your evaluation surplus will fall down to 200,000 from 250 because loss is only 50,000. Now, but had a gain not previously been recognized, then the entire loss will go in the statement of profit and loss. Now, thank you for watching, and I shall see you in the next standard, which is IAS 19. By the way, IAS 19 employee benefit is not there for the FR students, but it is there for SBR students. But if FR students want as an option, they can do watch the video, or they can simply skip and go to the next standard, which is IAS 20 government grant. Thank you.